All right. Good morning, good afternoon, good evening to you, wherever you are in this beautiful world. Welcome to our Inner Circle Live pre-New York session. I'm your host, Ryan Carthage. We'll be joined shortly by my awesome partner, Mr. Benny Allen. I hope everybody's doing well today on this beautiful Wednesday. As always, let's turn off all distractions, grab a pen and paper, let's take lots of notes. Let's make sure that we participate and engage. We want to make sure we start our day off by taking massive action. That action stands for accepting all possible losses before entering a trade, preparing you for the outcome, sending yourself, body, mind, and spirit, ensuring a balanced approach to trading, trust in your education, strategy, trade skills, and intuition. Imagine your trade successfully materializing, obeying your trading strategy, avoiding decisions based on greed or fear, and never looking back or stopping once your trade has commenced. All right, good people. So we're going to get down to business um, and take a look at the charts to see what movement happened as of yesterday. We know Donald Trump had his State of the Union address. We'll see what impact that had on the market, where the dollar is moving, and what to look for. So, if everybody can hear me okay, drop me one in the chat, and we will get things underway. All right, cool. So let's hop over to trading economics and we'll walk through a few things there, and then we'll dive into some charts. So, first things first, German 10-year yield soars to a 9-month high. The yield, Germany's 10-year bond surges 20 basis points to 2.67, highest level since late May, right? It's the largest sell-off in German government bonds since 2020. Amid expectations of increased spending and borrowing, the election winning CDU, CSU agreed to loosen the country's strict borrowing rules by removing most military spending from the debt brake and establishing a $50 billion off-budget fund to finance infrastructure projects. Germany's spending some money, loosening monetary policy. All right, largest player in the Eurozone. It's going to be interesting to see the impact on that overall in Europe. All right. Um, Eurozone producer prices rise more than expected. China. China's set its 2025 GDP growth target to around 5%, keeping the same pace as the prior year despite ongoing trade tension with the United States. Speaking at the opening of the annual parliamentary meeting, known as two sessions, Premier Li Qiang announced plans to spur domestic demand by expanding fiscal spending. Right, we already knew that spending was going to happen in China. The government will issue 1.3 trillion in ultra long special treasury bonds, right? Up to 300 billion from 2024, with the outlay expected to raise to 1.78 trillion. They're spending a lot of money, people. Spending a lot of money. So let's watch these Chinese ETFs and the yuan, right? Look for movement there. Beijing reaffirmed its commitment to a lower foreign investment, emphasizing its intention to an open economy regardless of external challenges, right? Regardless of what's happening in the United States, they still plan to open the economy. Defense spending will grow by 7.2%. That's a large number, right? 7.2% matching last year's growth and continuing China's military expansion. The government raised the deficit to GDP ratio to a peak around 4% from 3% in 2024, Regarding inflation, China lowered its annual target to around 2% for the first time in over 2 decades as disinflation risks persist, retreating from the long-standing 3% goal, right? So it decreased their goal at 2%, and they're spending money, right? So money is moving in China, regardless of what's being said. Um, so those investments in China over the long term is definitely a place to be. Um, so that's what's happening in China. Stocks 500 soared 2.2%. Stock 600 jumped 1.3 on Wednesday after booking their worst day in over 6 months in the previous session amid expectations that increased defense, excuse me, increased defense spending and borrowing will help revive the struggling Eurozone economy. In Germany, the election that was won, and they have agreed to relax the country's strict borrowing rules we just read, aiming to facilitate defense spending exceeding 1% of the GDP. Additionally, the parties plan to establish a €5 billion off-balance fund to finance infrastructure projects over the next decade. Defense stocks extended its rally on the news, right? Right into Rheinmetall 2.7%, BAE Systems 2.8%, Leonardo 4.1%, Thales 4.7%. Additionally, investor sentiment improved on optimism that the United States might ease certain tariffs following comments from Commerce Secretary Howard Lunick. Meanwhile, Adidas shares dropped 2.4% after the company expected revenue to increase by less than 10% this year. Um, so that's where we are in the Eurozone. Okay. Um, I want to take a look. I want to go through some of our indicators here. On the DXY, right? The dollar dropped 0.8% to 104.8 on Wednesday, its lowest in 4 months. As concerns over the economic impact of the new tariffs in the United States, the trade war escalated this week. 25% Mexico and Canada, 10% on China, which that 10% is a double of the previous levy on Chinese goods. In response, China and Canada announced retaliatory measures, while Mexico is set to reveal its response on Sunday. Following these developments, Commerce Secretary Howard Lunick indicated that the Trump administration might outline a pathway for tariff relief on Mexico and Canada goods covered by the North America Free Trade Agreement. However, early signs suggest that the new trade policies are already weighing on the U.S. economy. The latest ISM manufacturing PMI data pointed to a slowdown in activity, and prices growth accelerated due to tariffs, which they just got input yesterday. Meanwhile, the euro surged after Germany's election win, and they're going to ramp up spending, as we've read multiple times there. All right, so dollar falling because of concerns, right? We'll see if we mentioned this yesterday, right? We'll see if there is a retreat on the narrative from Donald Trump as the tariffs start to impact the country overall. We'll see what happens there. Okay. So we'll watch that. Then Japan. Japanese yen declined toward 150 per dollar on Wednesday, retreating from 5-month highs despite hawkish comments from the central bank, senior Bank of Japan official, Deputy Governor Shinichi Uchida, stated that the central bank would raise interest rates further if its economic forecasts are met, underscoring that the exit from its extensive monetary easing program has only just begun. New Central also emphasized that the monetary conditions remain highly accommodative, noting that the BOJ's reduction in Japanese government bond holdings has been limited. Meanwhile, the latest data showed that the Japanese services sector grew at its fastest pace in 6 months in February, driven by strong demand. Externally, the yen came under pressure from growing trade concerns after U.S. tariffs on China, Canada, Mexico took effect, prompting retaliatory actions. What was also stated in this talk is that they don't want to move too fast. All right, that was missing from this little snippet here. But he also mentioned that they don't want to move too fast because that could also have detrimental impact on the economy and where they're trying to go as a central bank. So um, it was overall it was hawkish because they're going to increase more, but he also stated that they're going to take their time in doing so. Right. So this continues to lend toward third quarter opportunity for changes in the yen. Um, and they don't have to do much, right, from a currency perspective, especially as the dollar continues to take a back seat, right? So yeah, so that's the Japanese yen. Okay. Um, yeah, Joy, they will have to post some of these videos that Benny came across yesterday in the community regarding these other countries and the stance that they're taking. It's a very firm one, right? It's a very firm one, and they spoke directly to the United States government and the United States people. So they're very serious about what's happening and where things are going and the actions that they must take to protect their people and their country. So it's a real thing. It's a real thing. So that's where we are. Um, that's where we are. To the calendar, GDP for Australia came in as expected. Um, CPI for the Swissy came in above expectation. We'll take a look. Some Swiss crosses there. ADP non-farm payroll later on today, right? Precursor to the Friday report. Then we got monetary policy report hearings coming out of the UK. Final services PMI for the dollar. ISM services PMI for the dollar. Crude oil inventories, the beige book. We'll see what's happening there. Governor Orr speaks later on this afternoon, and that's it for the day. All right. Benny, good morning, bro.
Ryan, good morning. Good morning, everybody. How are you, Ryan?
I am doing all right, man. Trying to sift through all the craziness, man. How are you?
Oh man, I'm doing good. It's a lot of chaos, eh?
A lot of chaos, dude. Talk to me about what's on your mind, man.
Oh man, it's simple. I'm sitting in mostly cash right now. You know
Mm.
that the what what the eurozone has decided to do really changes a lot, right? When you talk about that type of military spending and ramping up, definitely seeing the strength in the euro as a result.
Yeah.
You know, and then on top of that, what was that? What was it that was higher? I jumped on a little bit late. Was it the PCE or something like that? What would the
Oh,
I can't remember what I was reading this morning. All eurozone producer prices rise
oh,
more than
producer
expected.
prices. Yeah, yeah, yeah,
You
yeah.
know, uh, Germany 10-year yield source, right? That was on the front page, so that changes the picture a bit. And again, this tariff situation, on off, off on. Trudeau's message was pretty strong, strong as you're gonna see from somebody, right?
Talk
Uh,
to the team about about his message, man. We'll get that video posted in the community, but
yeah, it was just powerful. Like pretty much told him, like, hey, what you're doing is dumb. The way he set it up,
almost verbatim.
yeah, it's dumb. It's dumb. And called him by his first name, Donald, and told him it was dumb. What he was doing. And that they're prepared to do what they have to do. you know, and he spoke directly to the American people, spoke directly to Donald Trump, and spoke, directly to his fellow Canadians. Like nobody's putting up with this mess, and nobody's putting up with being bullied. You know, so that's what has me now. I think they're scheduled for a call today, if I'm not mistaken. Um, and so we'll see what happens. But it's forced me to go to cash, right? To sit in cash. I don't want to. I don't want to hand my money over to these markets. With them bouncing back and forth. So this is I'm mostly on the sideline right now. It just is what it is because there's that when you talk about uncertainty, we got it. We've got it,
Facts.
right? Because he told on the commodity front, didn't he tell what was it, Russia and somebody, was it Russia and Iran to ramp up uh oil supply or something like that?
Yeah, so they're looking at easing those uh easing those sanctions so that Russia can.
Yeah, so it's just man, it's just too much, man. Like,
Yeah.
like, dude, why? Like I watched part of his his State of the Union or whatever in front of Congress last night, and it's just like there are some decent things like with Taiwan Semiconductor investing more money in the United States, like so there were actually some decent things going on from a business perspective, like but why lie about everything else? Like why? Like it just creates a confusing picture of just mess and chaos, which I understand is systematic and in a lot of ways intentional, but it's just like you're the leader of the free world. Like why? Like why, man?
Yeah.
Like so many lies, and then in between these subtle truths, it's just like why do it? It's not good for anybody. I just it's just a mess. So I just hopefully throughout this month things start to sort themselves out.
Yeah, man. I definitely think that it's systematic. I think causing the chaos allows for the focus to be shifted and things to happen on the back end. This is me and my pessimistic view
Yep.
um of things. But I think that that allows for money to be moved
Yep.
and the people not actually see where the money's being moved to.
Correct. 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 I feel it. I feel the same way. It's just so that's what I just rather sit on the sideline and cash, wait for some things to short themselves out. I saw futures are rallying a bit this morning, so we'll see what happens when the markets open. I know we've definitely been looking for possibility of a correction in the S&P, which we seem to be getting. It's just a question of has it corrected enough, or is it going to continue to sell off? Not ready to say that correction is over quite yet, but we'll see. We'll see. But that's all, man. It's on my mind. Just about the same as everybody else.
Yeah, yeah, man. Um, it's definitely going to be interesting as we move forward.
Yeah,
Joy asked about the mineral rights deal. It looks like Ukraine, um, they're willing to sign this deal. Um, it looks like they're willing to sign the mineral rights deal. We'll see if that continues to move forward. But just in a quick search, it looks like they're willing to do so, move forward there.
yeah, yeah. I just I mean to to play the role of an isolationist at a time where the world is more connected than it's ever been. I think is a mistake because you're gonna enable other other nations to stop in to fill a void. in key areas. You have things like AI, USAID for a reason, right? Soft diplomacy, right? So, I just think that I don't know, it'll have long-term ramifications, but it is what it is. The American people voted for it, so.
Team, listen to me. If you guys have not watched those videos that we posted in community from Ray Dalio,
Yep.
go watch them. Go watch them. That will give you a good view into the trickle down effect of the actions that are being taken. Right? It'll give you some clarity and some perspective on things to look for, things to expect, and that'll help us to be better investors, right? While Benny's sitting in cash right now, um, because of the trickle down effect. And then coming back to the point of when we see sell-offs in the market, whenever those sell-offs bottom out, see crazy rallies, right? So making sure that we're in position and aware to take advantage of the opportunities when they present themselves, right? Super important. Super important. So if you haven't done so, definitely go watch those. Um, yeah, Joy, it's definitely the beginnings of some interesting changes from a governmental perspective. Um, Benny actually mentioned that yesterday. Going against judges' orders with federal funding. Benny and I had a conversation about that yesterday when it comes to decisions that are being made uh, against against the courts. So we'll see. We'll continue to monitor the developments and how things go, and continue to make sure that we put ourselves individually and collectively in the best position possible. All right. Any other questions from a fundamental perspective? No. No. Yeah. All right. Cool deal. I'm gonna come off of the yen for a second. We'll go to the DXY, pushing down. Okay, headed down. We broke that 105 level, and we're headed south. We got a previous resistance level here at 104,637, but the next support level, we'll see if that level serves. But the next support level is at 103. Okay, 103. So we'll see how deep the dollar falls, right? Before before we get shifts. We got stochastic in the sell zone. Okay. So we'll watch and see this 103, 374 level, right? Once price gets there, we'll see how the market then responds and where we are fundamentally and where we are from an inflation perspective. Okay. Um, to see what that back and forth then turns into between the Fed and Donald Trump. Okay. So we'll continue to watch things there, but headed south on the DXY. We'll come down to the 4, and you see we hit that 382 there, and then we ran to the D extension, right, in that break of that 105 level. So looking for pullbacks and honestly looking for continuation to the downside, at least in the short to midterm. Next level I'll be watching is at 103, 374. But that means watching those crosses and watching those continue to rise in the short term. Okay. So that's the DXY. Take a quick peek at the dollar yen. Um, you see, we broke that 150 level as the article talked about, right? We're sitting at around 149. Okay. Headed down, right? Headed down, pulling back. We'll see how price responds here. I think we'll get to the D extension at 147, 331. as the stochastic is starting to creep up into the zone. Um, we definitely could see some more downward pressure getting us down to this 143 range. Okay, somewhere around here. I wouldn't be surprised if we come into this zone. Okay. Um, that wouldn't fully surprise me on a move down and then seeing a bounce from there. Been an interesting turn of events. I'm still not fully hawkish on the yen yet, even though things are slowly shifting. Um, I don't know as prices continue to come down and that yen strengthens kind of on its own with dollar weakness. Um, I see the Bank of Japan kind of sitting a little more still as those developments occur. Okay. Coming down to the four, sitting at a fresh AB boundary here, right? Stochastic in the sell zone. So again, looking for more pressure to the downside as we're below the cloud here. Okay. Um, mm, Let me come back to the daily. What is this level here? Oh, that's my box. Okay. Yep. So down into that range there. And we'll put this daily support here as well. Boom. So downward pressure and that D I mean that D extension is right above that area that I just marked out. Right. So more downward pressure here on this dollar yen in the short term. Okay. So we'll continue to monitor the developments there. And we'll sit tight. Right. We'll sit tight and watch the show. Right. And we'll look for the opportunities once the show commences. Okay. Um yeah, so that's the dollar yen. Questions here?
Nope.
No. All right, cool deal. Um, okay. Swiss yen. We got to a low price and we're turning over. Okay. Stuck in this range from a longer term perspective, right? We got to the bottom of the range here, and now we're starting to push back up. All right. And that's super long term monthly perspective here on the weekly, right? You see that start to turn there. So we'll come back to that daily. And you see we had a double bottom here, right? At 165. And we're trying to press back to the upside, strong bullish action. And we're getting a pullback now, right? So again, looking for rises here still. Okay, we'll take that level out. Broken. We'll take this level. That's a resistance level there. We'll add this resistance level here. Okay. There's our box, right? So we'll see when we get back to 169, are we able to break through that and continue moving up? Or do we come back down and stay range bound like here from 169 to 165? Okay. But we're in a risk off environment right now. Okay. We're in a risk off environment. You got two risk off currencies against each other here. So down on the four, right, you see that shift, strong bullish action with that elevated CPI data for the Swissy, right? So you see that shift in strong bullish action, and you're getting that pullback. And you got a break of the cloud, and you got a bullish cloud ahead, right? So when we get down to the 1 hour time frame, look for a pullback and a continuation to the upside with the break of that cloud. You guys follow me there, right? So looking at some longer term movement to the upside there with the break of the cloud on the four. Okay. So down on our one, had already broken the cloud and we're headed to the upside. So I want to run a fib from here. Let's see. Yeah, boom. Okay. So I'm looking for this action. Come back, retest the cloud on the 1 hour, and then look for that continuation to the upside. Okay. So keep your eyes on the Swiss yen for potential longer term opportunity to the upside. Questions on the Swiss yen? Oh, not cool. Pound yen. Got it. After that conversation yesterday, you had, I'm sorry, after that conversation yesterday, this pound yen, you saw spike to the upside. Okay. It was indecisive, tons of back and forth, but then you saw some strong bullish action occur. Okay. We held here at 188, and now we're pushing to the upside. Okay. We're coming into a level of resistance here. Okay. Similar to that Swiss yen, we're able to break this level of resistance, look for that continuation long, right? But on our fib, 786 retracement. So our matching extension is 204, which goes back to our original thoughts of the yen getting back to 208 at some point, right? So we're watching this development. And even though overall the conversation yesterday was hawkish, there was some dovish sentiment sprinkled in there, right? That gave some hints that things could be slower. Okay. So looking for continued movement to the upside here. Okay. So as we come down to the 4, we talked about yesterday this pullback happening, right? Back into the zone after that push up, that pullback occurring. And then you saw the takeoff again back to the upside, right? So we retested the consolidation zone on this pullback, and now we're headed long. So this 8-6 retracement puts us in line with that 193, 194 area. Okay. So headed to the upside on this pound yen, similar to the Swiss yen, but look for pullbacks and continuations. You caught this one. Beautiful, Joy. Great work. Great work. Drop some sevens in the chat for Joy. Keeping our eyes on these as they're moving. Right. Throughout all the craziness, right? If you were to just sit still in the zone, right, and allow price to move in your favor. Okay. And this is an overall zone that we had marked out from a longer term perspective. 618 retracement. Overall, looking at a matching extension 203. Okay. In line with that 204 area on the daily. It's just a bunch of craziness going back and forth with everything that's happening all at once. Everything, everywhere, all at once. Do you remember that movie? Right. That's where we are right now. Everything's happening all at once. Okay. So looking for this to continue moving along. Coming down to the 1. So I just want to look short term here and just this move to the upside. Right. And looking for a pullback and a continuation. So I'm looking for there. Okay. That's what I'm looking for. Questions on the pound yen? Nope.
Nope.
All right. Cool deal. CAD yen moving down. Overall moving to the downside. So we took out that A. Beautiful 80-20 here. Boom. And then continue to take out the A. So we'll pull this out. Let's see where we go from here. Are we able to push back to the upside? Stochastic in the buy zone, trying to create a low. See if we get 2 more days to create that swing low there at that level. Right, if we do, see this start its move back to the upside. Okay. A double bottom almost here at that B boundary. Okay. So let's watch that from that perspective. Did we get to that D extension? We did. Right. So a fresh AB boundary on the sub fib D extension there. So we'll see what happens here. See if we get a bounce and that push back to the upside in favor of the Canadian dollar. Coming down to our four, shallow retracement pushed down into that 118, 127 zone. Strong bullish action, right? Different formation, similar idea, right? Strong bullish action here. So we'll look for pullback, continuation, right? 80-20 playing out there on the four. Okay. Down on the one, trying to break back above the cloud. We're going to run a fib off the high. Boom. Okay. Add D extension hit there on the one, push up. Now we're looking for a pullback. So that's our look from the top, but we know we got an 80-20 on the four. Okay. Bingo. Looking for that. What's up? Okay. So if you're in the markets, continue to be patient and pick your spots, right? But these ends are setting up in a way that kind of aligns with what we've talked about. It's just been taking us time setting up, and we'll continue to monitor to see how these movements go. Okay. That's that. Let's look at the Aussie dollar. Aussie dollar daily time frame, right? You see, we got the deep retracement, price turned over, came back down, but now we're creating a swing low. We're trying to create a swing low. We got stochastic in the buy zone here, right? So do we get another leg to the upside here to take out that A? Okay. Let's continue to watch this and see how the dollar moves. But if the dollar continues its weakness, right, we could see this continue moving to the upside, taking out that A boundary there. Okay. So that's on the daily. Coming down to our four. We didn't get that head and shoulders. Price just collapsed. Boom. All right. So now we're sitting here. Now we're sitting here. Okay. Got a reversal. And let's see what happens. Come down to our one. Didn't look at this yesterday. But boom. That was Monday night. Takeoff, right? Just tap that 118 level, reversal to the upside. Okay. So and look for that to continue if we continue that dollar weakness. Okay. So that's on its way to the upside there. So we'll continue watching the dollar crosses and see dollar pairs to see where those may go. Any questions on any of those? I've been kind of just moving. My apologies.
Nope, you're good.
All right, cool deal. Euro dollar takeoff. All right. Then you talk about all the pieces that are happening there, right? Strengthening of that euro. That's on a weekly time frame. Boom. Right. So we're headed back north here. We're headed back north here. We'll see how the week closes, but looking for pullbacks and continuations to the upside, at least for now. Okay. That A boundary got taken out. Right. We talked about it yesterday to see if we get that move. And it did. Boom. Took out the A. So now we're tracking to the upside. Okay. That's where we are. The extension achieved, waiting on a swing high, pullback, and potential continuation to the upside. Coming into a previous weekly support level here. We'll see what happens at that level. But right now, based on the state of things, looking at pullbacks and continuations in favor of the euro. Okay. We come down to the 4, and you see the swing, right? Regardless of all the madness, you had a 618 retracement on February 28th. Price ran to the D extension with all the madness. And the sequence is still the sequence. So there we are on the 4, coming down to our 1, right? Looking for pullbacks and continuations. We got an 80-20 here. We'll see if this plays out. We might push up to the D extension first before we get the retracement. Just be aware of that. But we got an 80-20 here on the 1. Okay. Got an 80-20 here. So yeah, no, right now it's bearish. Benny said, at what point do we say the dollar is bearish? No, the dollar is bearish. The dollar is bearish. Okay. It's moving down. All right. It definitely is. Okay, and it has been since the beginning of the year. All right. So we're definitely in a bearish state, right? It's just a matter of how things continue to move, right? And that's what we're looking to see. But the dollar is definitely bearish right now. For sure. For sure. Yeah, yeah. Definitely bearish. Definitely. Right. And all the, like we took out the A there, right? Which is why we had to flip the fib. So yeah, no, we're definitely moving down on the dollar. Certainly. It's just a matter of does it continue does it continue to fall and how far? Okay. That's my question. How far does it fall? And is there what happens to change that? Right? If anything. If anything. Okay. So that's where we are, right? And so on this one, looking for low prices to get back long. Okay. It's been running. So if we can get a low price here on a retracement, can we get that action there? Okay. So that's the wrap up on the euro dollar. Checking on this euro NZD. I'll run into the upside in favor of that euro.
Do you think this tariff situation is going to be long lasting?
Ah,
That's what's weighing on the dollar right now and the impact that it could have on our economy.
it is. Um, it's crazy, but I think that it could, even though in was it 2016 his narrative changes, his narrative changed, right? Um, Once that started to impact the economy, um, I think he's at a place where he's really trying to isolate everything, and he'll do whatever's necessary to do so, regardless of the impact. He'll spin the narrative. So I think it could. I don't know that he changes his narrative, even though they say it's possible. I don't know that he does.
Yeah.
It's my personal opinion. So it could be detrimental in many ways, but that's kind of what he wants to, I think. But what are your thoughts on that?
I think it's hard to get in the head of somebody that I think is insane. If you're not insane,
This is fact.
uh, I don't know. I know that's what's weighing. I know that's what's weighing on the market. So if that shifts, that's going to cause that dollar to shift
Yeah,
because the the fact still remains. The Federal Reserve doesn't seem to be in a rush to cut the rates.
truth.
So the question is that the downward spiral that you see with the dollar right now, is that temporary, or are we looking at a major shift in the trend
Mm-hmm.
of the dollar going forward for the rest of the year, right? Uh, because when you look at what's impacting it, it's also impacting the stock market. Now, we typically will have the opposite, right? A weak dollar, you see the market, you know, you see the market will move in the opposite direction as a result. But we always say is it always comes down to why the dollar is weak, right? So this is
Correct.
one of those scenarios to where if those tariffs get lifted, if they're not long lasting, it's not only going to cause a rally in what the dollar, it's going to cause a rally in the market as well. So that's
Yeah.
one of those occasions where they will correlate because of what's going on
The reason
fundamentally.
why.
Yeah, and the reason why.
Yeah.
So that's just me looking at things from a longer term perspective. I see in the short term, yeah, that dollar's dropping, right? We know that's the lowest it's been in months. But is that going to be a sustained move, right? Is that going to be? Are we at a point where we're getting that major shift, you know, that we see from time to time? Like there's, like, for example, like the yen, right? Where there was a time where it ran strong for the upside for several years, and then you started to see several years of decline. Where are we at in the cycle as far as the dollar, when we know that monetary policy holds the biggest weight, and they're not looking to budge. Their concern's still about inflation, and that's the confusion. That's where the confusion is with his policy, right? Is that we know that it can also lead to higher inflation, which they're not going to cut rates. They're not going to cut rates in a situation where you can see higher inflation.
Right.
They're not going to do that, and that's going to hold the most weight on the currency. So that's why I'm sitting in cash right now, because I see that dollar moving down, right? But is that a short term move because of the craziness in the policies,
Mm-hmm.
which we know his policies can shift in an instant. He
Yeah.
could get out that car with Trudeau today, like, well, he called me by my first name in the press conference yesterday. We worked it out. It's all good. Like, you know what I mean? Like, is wild right now. So that's why I'm, like I said, I sitting in mostly cash, and then a couple of positions that I'm sitting in, I actually reduced them. You
Yeah.
know, so that's that's just my thought. You
I
know,
dig it.
yeah,
I dig it for sure. But yeah, that's like you said, that's the question. Are the tariffs a long-term thing? And what happens with interest rates? That's is the opposite right now. His policy is they're on opposite ends.
yeah. Who
Um,
was it? I was listening yesterday. Where Who was it, man? I gotta find that again, because they were predicting a possible shift where the projection, because that's another thing, right? Coming coming into this whole thing, coming from the last administration, things were good in regards to GDP. They were talking about 3% GDP. Now somebody major, who was it that called out yesterday, like, going forward in the future, like, if these policies are sustained, like a possible negative 2% GDP.
ah,
You see what I'm saying? Like that, like, could result in all these shenanigans.
yeah,
So that's what really prompted me to, like, you know what, I need to be sitting in cash right now, because that's insane.
that's wild. That's wild.
Yeah, that's insane. Now we know if we get two consecutive quarters of negative GDP, then we're sitting in the recession. But technically, that's
Mm,
the term that
Trump session, what
yeah.
they throwing out there.
So
Hmm.
that's why I'm like, I'll sit in cash, because I'll look to, my longer term, I'm not looking at this from a day trader perspective, right? Um, Looking at it from investing and looking for, those discounted prices to buy. Right. And I'm like, well, if that occurs and we see a major market correction, which look, let's face it, the market has been on a tear. Like this has been a golden age for
Crazy.
markets. Like I think a lot of people, because we get so busy in our day to day, like regular, just average everyday folks, who don't constantly wear that investor cap, don't realize like this has been a golden age. Like this market has been ridiculously crazy, you
Mm-hmm.
know, and people just keep up until this point, keep pumping money into it. And it's just trying to figure out now which way it wants to go, right? We saw the major bank CEO earlier in the year say, hey, we do see a major correction coming, but we still at the end of the year see the S&P hitting 6,500,
Right.
which from a daily perspective on our charts, I think it's 6,600 is the D extension on the
Yep.
daily, you know. So I'd rather be in position to catch that dip if that occurs, right?
Exactly.
So yeah, this is part of the game. Sometimes it's not always a matter of actually being active in a trade per se, as opposed to just being active in observing your charts and observing the fundamentals to prepare yourself to get in a better position.
Bingo. Bingo. And I'm in the same position, bro. Sitting and watching. Sitting and watching. Right? Just waiting for the dust to settle. Waiting on the dust to settle. Joy, you got your hand raised.
I do.
What's the deal?
As a person that look at strategies and stuff like that, is the government graded based on quarters?
What do you mean graded?
Like how companies is graded for Q1, Q2, Q3, report cards. The reason why I ask is because by this being Q1, like, are they looking for Q1 to be distract, to do everything that they need to do to get, and then for them to come back like Q2, Q3 and try to make things righteous?
To be honest with you, my first response is your guess is as good as mine.
Okay.
Um, but the thing that I've just observed about Donald Trump is he wants to be perceived as the quote unquote savior,
Right.
right? And how do you do that? How do you do that? You create a narrative of doom and gloom, and you create the environment for things to be doom and gloom, and then you implement things that should have been implemented at the beginning
Because
for it to be better.
at the end of the day, he was the person that negotiated the original trade deals with Canada, right? And that in
Mm-hmm.
that way, this is final, we won't go against you and stuff like that. And then turn around and say, I don't know who created this deal is ludicrous to me, because we've been on your taxes, your tax calendar, your raised salary increases during the Biden administration, and blame that on them. And to me, it seems like that's exactly what he playing as. It's like, okay, we're gonna do all of this at once, and put a disturbance in it and make them feel like all is lost for them to come. And this is the reason why I asked, because when I was in school, I knew I had to do good in specific quarters so I could pass that grade. You know what I'm saying? So that's the reason why I was asking that. Is this his savior plan? I know I don't know his plan. But to me, it just looked like his savior plan. And I was
Mm-hmm.
just, that's why I was wondering if the government was graded on, their Q1 and their Q2 earnings and stuff like that.
Ben,
I
you got a response?
I think it's better because you're dealing with somebody whose only tool is a hammer, so everything is a nail. I think
Mhm.
it's better to roll with people like a Ray Dalio, like Ryan said, like watch those videos and get a better understanding of where we may be in the short term and long term debt cycle. I think that those are his system and the way he looks at the world is a better framework than try to figure out what Donald Trump is doing or any administration who may work because they work in terms, right? 4 and possibly 8 year cycles. Like I would rather follow somebody like a Ray Dalio and really study their global macro approach and go there because that's gonna outlast any president, any administration, because there's historical precedent there that's been studied deeply from a very successful man, you know, as it relates to the market. So if I look for any type of framework, because I see exactly where you're going, Joy, I would I would I would look at that because then when you look at that, we already know the things that he keys on from a historical perspective are things that we already follow in this group. GDP, retail sales, interest rates. Those it's still about those key fundamental indicators. Now, each administration and their policies will impact those key fundamental indicators that we already follow in a positive and negative way. And to really make a good sense of how all those tie together historically, you got to follow Ray Dalio and his framework. To me, it is uh, the simplest explanation to what is a complex game.
Mhm.
So that would be my homework for everybody. Like Ryan said, like that's it. Like even like me and Ryan have followed him for years, but some of the latest stuff that Ryan was able to tap into, it actually made it's funny because I was driving my son back. Not I was listening to it a little bit then, but I was actually I went to the store last night and I was starting to listen to it again, and it just made me in my head like, you know what, read every book and master everything that this man is talking about. Everything that this man is talking about. Because I feel like I can't lose that way. I can't lose that way. So
Mhm.
that would be like the the unofficial official curriculum for the Forex trade room. Like,
and, and and listen, Ray Dalio, he's putting out more content now than ever,
yep,
and daily he's talking about additional details and going step by step through all of this. As his global macro approach from a historical perspective, it includes this cycle that we're in right now. That's the beautiful part about it,
yep.
right? So, like Benny said, it'll outlast everything because it includes it all. So, yeah.
Yeah, I just think that when he's in that giving back phase. When you get older and you've been so successful, you give back.
Mm-hmm.
And I think that's a gold mine for a lot of it. I'm thankful and grateful for it. If I ever got to meet the man personally, I'd shake his hand and say thank you very much, because he doesn't have to do it.
Right.
It's like he's on a mission, is what it seems like for how active he is.
Exactly.
So that that's my new finance curriculum to study. Like, you know what I mean? To take it from the books that you learn in college to actually, okay, having somebody put it to your face and say, "Hey, I've been highly successful. Like, this is the next level. This is what brings it all together."
Right. Right. So that's your homework, good people. Study Ray Dalio. Study Ray Dalio. All right. All right. Got to get the kids ready for school. Phenomenal session. Good people. Tap into the community. Tap into the community. The accountability group, 6 p.m. Eastern Standard Time. Tap into them as well. And we'll be back at it tomorrow morning, 6:30 a.m. Eastern Standard Time for the pre-New York session. You guys have a phenomenal Wednesday. Peace.